So we are live. Hello, everyone. Welcome to our side event on Development Cooperation Forum that will start tomorrow at the UN. We have this great opportunity to discuss today on development cooperation in Derisking strategies on financial protection to tackle rising natural catastrophe exposure. I would like first to thank to DESA and the DCF team for having us on board on launching these side events today. With me, I have two fantastic guests who have very kindly accepted to join us in this discussion. Laurent Zilberberg, the former member of the Secretariat of the International Association of Insurance Supervisors. So welcome, Marco.
Thank you very much.
I am Bogdan Dumitrescu. I'm the founder, president, and CEO of BJD Reinsurance Consulting Company, an organization which is in special consultative status with the Economic and Social Council. And I'm also former ambassador to Europe of the International Insurance Society. I will moderate in a way and introducing a few of the topics that everybody can also see on our website, on the agenda and the concept note that has been published there. What I would like to start with a little of a background, explaining a little bit from where we come, what's the context of this discussion and the rationale, what would be the key discussion points that will be developed by our guest, and of course the future of the public-private partnership in the risk financing. And the expected outcome that we may see in the future, or at least wish for. What I would like to say first is that the global insurance industry has long played a crucial role in financing disaster recovery, risk transfer, and resilience building. However, shifting financial landscape marked by a reduction in development cooperation funds, evolving government policies, and increasing natural catastrophe exposures present new challenges for sovereign risk pool, public-private partnership, and financial protection mechanism. As just an example, the recent policy shift in the US, including potential reduction in USAID funding, changes, for example, in FEMA priorities and the future of the National Flood Insurance Program, the NFIP, could have far-reaching effects on both domestic and global insurance frameworks. Particularly vulnerable are small island developing states, the seeds in the Atlantic and Pacific, where climate-driven disasters are intensifying, and financial protection depends on regional risk pools. Like we can mention here the Caribbean Catastrophe Risk Insurance Facility and the Pacific Catastrophe Risk Assessment and Financing Initiative. So in this side event, we'll try to explore how the insurance sector, alongside the finance industry, can adapt and respond. The context is that the shift in the public funding and global risk finance, we have the reduction of US funding for development cooperation, and this could weaken disaster risk financing mechanisms that rely on public-private models. So the question would be, how will the insurance sector is ready to fill these gaps? Impact on existing and future public-private partnership PPPs, the established risk financing mechanisms, so like sovereign risk pool, catastrophe bonds, parametric insurance solution, depend on strong partnership between governments, insurers, and international donors. So how will current funding changes impact them, and what future models can be built? The vulnerability of small island states. Climate change disproportionately affects those small island states in the Atlantic and Pacific, where storms, flooding, and rising sea levels are escalating economic losses. The success of the both facilities I have mentioned in the Pacific and Atlantic as regional insurance solution raises the question: can these models be scaled up? Or will financial constraints threaten their sustainability? With regard to market response and innovation, with increasing disaster losses and funding uncertainty, insurers and financial institutions must explore new risk transfer mechanism, climate resilience bond, and alternative capital solution. So very briefly, because my guest will touch on all these points. Some of the key discussion points are the role of insurance in a changing financial landscape, the future of public-private partnership in risk financing, alternative risk financing strategies in the absence of development cooperation fund. Guiding question for discussion and presentation. I will mention some of the points and question that came to my mind. And with regard to the expected outcome, we'll have a roadmap for insurance industry adaptation, the policy recommendation for public-private partnership, and few sustainable solution, alternative risk financing mechanism, and the strategy on development finance institution. So my guests today, Makoto and Laurent, have both they have a longer standing experience in those fields. I would say on both sides of the balance sheet of an insurer, should it be as a risk taker and the premium on one side and investor on the other one, and both of them have a very clear and perfect approach on where we are, what are the challenges, and what we need to achieve to keep it sustainable and of value for the citizens our industry is protecting. So before giving to you, Laurent, the floor, I just would like to I can come back a little bit later on this aspect, but one which came into my radar very recently is a project that has been launched last year in London by the Willis Tower Watson, who announced US-led funding for transformative climate finance solution to scale up adaptation investment in vulnerable countries. I just would like to read a few sentences from this publication that has been made at that time. So it was a year ago. With US-led funding, Willis Tower Watson will design a pilot facility to offer a parametric insurance solution, which is called Resilience Wrapper, that protects direct loans to private enterprises from climate-released shocks. Following a triggering event such as cyclone, flood, and drought, the subsequent loan repayment will be covered by the insurance payout. The resilience wrapper protects the borrower's debt servicing obligation from the most impactful climate risk, ensuring that they can remain operational and avoid default following a shock event. So this is exactly the situation where we were, and which is challenged today. And as I have mentioned, the second example is in the States with FEMA, who said that they have halted work on flood smart 3 catastrophe bond due to the new orientation and decision that the new US administration has made. So, Laurent, where are we going with all this background I just put here in few words, and what are your views on this?
Thank you, Bogdan, and thank you for inviting me for this panel. Well, I will disappoint you because I will not tell you, because I don't know where we are going to. I know where we are coming from. And where do we come from? First is very basic, and in the insurance industry, we know it very well. It's a less costly disaster is the one which did not occur. As soon as the disaster occurred, it cost. So the first thing is how to prevent disasters to rise and to occur. For that, we know three things. The first one is that for the disasters in low and middle income countries are occurring more often than in developed countries. And most of the time they cost less, even though there are more people affected. Why does it cost less? Because the infrastructure are less developed there. And because there are less infrastructure, this is also the reason why the disasters are occurring more often. So if we want to avoid the disaster, we need to develop infrastructure. The second point is we know, despite whatever X or Y or T will say, that climate crisis is here, climate crisis has effects, and it's here to stay. And we need to tackle this crisis because we paid for it 3 times. We paid for repairing the damages of the climate crisis. We paid to avoid the climate crisis to worsen, and we pay also for building new infrastructure, new houses, which are more costly, more expensive than before because of the cost to resist of the climate crisis. Having said that, what are the possibilities? If we look at where we are today, we are broken. Northern countries are broken. The only ones which are not broken are emitting false money, and they are emitting the paper, but it brings the inflation, and therefore they need to bring more money for that. As we are broken, that doesn't mean that we do not have money. That means that we cannot spend the money in the same way that we used to spend it for many years. We need to develop the leverage effect. That means that for €1 or $1 or 1 yuan, whatever, you need to have a better return on investment. And the better return on investment, the higher return on investment you can expect is when you take more risk. And for that, you need to invest not only on debt, but also in equity. And this is, if we invest in equity, we will take more risk, but we will be enabler for projects, we will be enabler for infrastructures, for low and middle income countries. And this has a global effect on the world economy. It is untrue, or it is, I think, very short view to think that each penny that you spend out of your real direct national country is a penny that you lost. No, it is uninvested. It is invested and it has a return. And the return is not only is for you, but it's also for other people, and therefore you have a multiplying effect for that. So this is the first point. We are broken, but we have some liquidity, we have some money. Second point is we invented for now many years some tools like the PPP. They are not well, they were not very well publicized during the 80s because most of the time in the 80s the PPP was only a kind of privatization without any control from the public and from the let's say the service level agreement that we can expect were not at the level that we shall have expected. Things have changed today. Things have changed, and I'm completely convinced that government, local governments, multilateral banks, development, public development banks, all of them have the skills to moderate, to develop, and to conduct PPP, which are to deliver services at a good level for the customers. And I will finish on two points. The first point on which I would like to say is we need to reinvent blended finance. The private sector will not take the risk, will not invest on the right places. But there are a lot of money for in the private sector. So the role of the public sector will be to de-risk a part of the private sector and to funnel the money from this on the place where public policies are asked to do it. And this is the role of government, the role of all the public actors. The second point is this will be done not at the local level, not by local actors. It will be done only by developing cooperation between different levels of public finance actors, whether they are multinational, national, or even local in federal government. And this is a key aspect. We need to develop that cooperation, which is not completely easy because all those actors I just quote, all of them have an history of to be a kind of monopolistic actors in their own part, and it's not easy when you have an history of being a monopoly to develop a kind of cooperation.
Fantastic. Yes, absolutely. I fully agree, Laurent. I just would like to jump on whatever you insisted on when saying we are broken, and something very interesting. I saw very recently a paper where it explained that Gulf states offer development assistance in Central Asia as Western donors step back. So it's an interesting way to see how we operate shift on from certain regions in the world with some others. So here we see clearly the Gulf being involved with Central Asia. A very interesting initiative there, and support that deserves to maybe to even another event in itself to discuss on that.
But what is very important, Bogdan,
yes,
on that point is to keep in mind that when you are broken, that doesn't mean that you don't have money.
Yeah. This is your point.
There is a huge difference on that, and the thing is that you need to use it rightly, wisely, and also you need to mobilize all the liquidities which are available. And to speak about Central Asia, I will just give an hint about Africa,
yeah,
but also in Asia. In all the countries, there is no countries, even the poorest of the world, there are always savings. But the issue is that those savings are not mobilized because they are not centralized, they are not put in a bank or an insurance company or pension or caisse de dépôt or whatever, because within those countries, there is no confidence in the banking system, in the banking sector, there is no confidence in the financial sector, and without that confidence, you cannot invest, you cannot mobilize that money. And so the issue is about mobilizing, it's not about creating money.
Yeah, absolutely, mobilizing. And because you mentioned the blended finance, I have in mind, and I would like to hear you on this aspect. If you can share with us a few words about the MDBs, the multilateral development banks. I remember 10 years ago I was at the spring meeting at the IMF and the World Bank, and we had this discussion launching at that time the forum in supporting, and I really have had the feeling at that time that all these MDBs coming together, they are a path to this blended finance that we are discussing. How do you feel there the evolution in this on this side with the MDBs?
I think we are moving from one world where the NPB Development Bank were leaded mostly about the idea of subsidies, and now the issue is how to create those leverage effect, and this is why there was a summit in Johannesburg a week ago, 2 weeks ago, with the Financing Common Summit, with the French Development Agency, with all the public development banks. It is key to move from this vision of a concessionary role to a role of dynamic. And this is where the blended finance have a key role to play. And I think that we have an opportunity, as I said, following the financial crisis of 2008, 2009, to give a specific role for public finance, which was not the case before. Before that, the public finance was regarded as a stranger in the game, a stranger in the game of the economy, a stranger. And I think because of the crisis of 2008, 2009, because those public actors were not, they had a key role to develop and to retrieve the normal functioning of the finance at that time. Things have changed. So there is a new legitimacy for public finance today, and that doesn't mean that they have all the means to do it. They need, once again, to do it by cooperation with the private sector, and cooperation between themselves.
Fantastic. Few words, and I will give the floor to Marc, because I know that he also has a lot to say on the regulatory aspect. You mentioned Laurent, the legitimacy. We have seen what is happening in the with the new US government. We know the way we proceed here in Europe. How do you feel? I would say the next step on the regulatory aspect. The regulation on one side, a little bit too over on the other one. How do you feel? Are you comfortable with the way we evolve with the regulatory aspect?
Maybe for 3 points. The first one is about US aid. First of all, it's dramatic for the people. It's dramatic for the people who will not receive. They will not have the finance for tackling AIDS. Probably there will be a dramatic effect for the population in Africa for AIDS. And what we have done in the last 10 years, there is a major risk, a major epidemic risk for in many countries. So, and AIDS and the US aid was about subsidies. And this is where the issue is. Rather than stopping everything in a brutal way, is how do we change from subsidies to developing financial instruments. the second point is things are moving, things are evolving. Look at Asia, look at Southeast Asia. There is no more starving in Southeast Asia. If you go to Malaysia have changed. It is a middle income country for now, let's say at least 2 decades or 3 decades. If you go there is nothing real bad. And there is a big bet on the map, on the world map. It's about Africa.
Yeah, Africa, yeah.
Because in Africa, there are a lot of people. It will be 1 billion people will live in Africa, and it is a urban country.
Yeah.
It is not. We think about Africa with lions and giraffe and the savannah and whatever, but the reality of Africa is about large cities.
Yeah, demography.
Dar es Salaam, yes, Dar es Salaam. In 10 years from now, we'll have more than 20 million inhabitants.
Yeah, Nigeria.
It's the same for Khartoum.
Nigeria.
It's
also.
the same for Khartoum. Lagos,
yeah.
of course,
yeah.
Lagos.
Yeah.
And, so, and more you have this issue because there is a kind of rural exode. And if those people, if they don't have the needed infrastructure in terms of sanitation, transport, work, because they need to work, there will be necessary migration aspects.
Yeah.
And those people, they will not just die in their own country, they will move. So there is, and when we invest for that, and if we protect that, and I'm coming back to natural catastrophe, by financing infrastructure against climate change, we help ourselves to deal with the demographic challenge.
Issue, yeah.
And the third point is about the changes. We have invented in the last 20 years lots of new financial tools, like the mezzanine loans, quasi-equity, and all of them. We need to mobilize them, and we need to reach a financial system which will be built much more on confidence than on the IRR that we are looking for, which are much of the time when you look at and we all look at business plan or which have all very high IRR. The yield will be fantastic, will be a double digit, but the reality is not there. If you look back, the reality of the IRR in Africa is 8%, and I don't believe, I know that I'm not very popular when I say it, but I do not believe that the IRR in the future will be at the same level than in the past. And if we expect the same level of IRR, we will be very, very disappointed.
Yeah. Thank you very much, Laurent. Makoto, just tell us how do you perceive all these challenges from the insurer point of view? I know you are now in these days in Bermuda to attend a risk summit with peers from our industry. Maybe you can also touch a point on some of the exchanges you may have with our colleagues there. Please.
So we have been discussing on the risk and also the opportunities. So we as an industry, we think that it's good to bring the balance of yin and yang to the universe. For example, the regulation is always good because we have to protect the consumers, we have to protect the financial stability. But if the regulation becomes too excessive, so then the people are not like having the affordable protection, and sometimes the investors have to sell in the market, which is not very good for the price of the capital markets. So I think the good balance between the the risk and also the growth opportunities and the maybe benefits for the society, that will be very important. And in terms of long-term nature, so you are the long-term investors, So I have been working with the APEC and other international standard setters to tell them that the good regulation should incentivize the company to be good in the long run, not just to look good today in the current quarter. So long-term orientation for policymaking is absolutely important. Otherwise, you would sacrifice the future by looking good today. So this is a very important aspect. So I think I feel the sympathy of what you have been talking about.
Yes, please.
If I may react just
Please.
on the regulation, because you asked me also about regulation. The issue is very complex. The issue is complex because, as Mac said, we need to offer a robust system. And we know what is happening when the system is not robust. It happened in 2008, 2009. We're about to have a world collapsing of the whole financial sector. So there is a real need for offering this robust system. And the way to offer a robust system is to make it simple. And there is a big bet. The bet is the fact that when you make it simple, you put every project in the same basket. And for example, to give you a very concrete example, when you launch an infrastructure project, it is very risky. But 5 years after, when the project is built, when you have the first, it is built with a delay, but the result and the infrastructure is there. The risk is quite low, and you need to refine. So you are able to refinance it. But if the infrastructure project is regarded as it was at the very first day, the level of equity which is asked to have for the banks, will be at the same level. This is just stupid. And you need to adapt to the reality. And the difficulty is that when you adapt to the reality, you make it more complex. The major risk I can see, and I always say that, is that we will all die in good health with the system that we have today with Solvency II and Basel III. We need to refine it to be more precise regarding the project, the state of the project, the different steps of the project, where we are in the project, and also it is not the same when the sponsor of the project is a major public finance sector like KfW or EIB or the African Development Bank or whoever, or the Caisse de dépôt, rather than a small private regional bank which not necessarily have the equity within its own account. And so you need to take into account the specificity of the actor.
Yes, I get it, Laurent, and just because Mac mentioned and you insisted also, Laurent, on this point on the long-term orientation, I translate that into a next generation, future generation, which is very very important. And the way you mentioned also to this temporality, Laurent, that we need to die in good health. And I know that that health it's also a topic in which Mac is involved. Mac, how would you react to what just Laurent just explained on this sheet from going out from today and our individual approach to a more empathy feeling and switching to the long term that you mentioned into this future generation?
Actually, recently there are a lot of investors, including insurance companies, are focusing on the responsible investments and sustainable investments. Not only the short-term gains, but also the the long-term growth as well as the impact for the environment and social. So this is actually a very important shift. So, and then I think the insurance companies, especially life insurance company, have a long-term duration. So we don't have to get the money today because our customers were expected to receive the money when they retire or die. So it's like maybe 20 years, 30 years ahead. So in that sense, life insurance industry is a fantastic industry. We receive the money today, but we don't have to get back the money to the customers for the next 30 or 40 years. This means that I believe that this is a responsibility of the long-term investors and life insurance companies, the pension funds, to support the long-term development of the society and community. So it's not just, like for ourselves, but for the society and community, we are having that kind of fantastic feature as a business. So for that reason, I'm very supportive of the long-term investments, which could be a good, like a contribution. And you briefly talk about the regulation and issues for the, for example, sometimes like a capital market and solvency. So in terms of the capital requirements, there are a lot of discussions in Asia. So for example, of course, for the regulatory perspective, it's safer if you give the higher capital charge for the riskier activities and investments. But usually if you go to the MBA, so they are telling us that we can have the portfolio, which is, very good to have a balance of the expected returns and the risk. Usually the higher risk will be compensated by the higher expectation of our returns. But if you have a higher capital charge, we could not expect the higher return for the riskier investments. So that would remove the incentives for the long-term investors to invest in the equities or other, the growth supporting the assets class. So this is something that we want to change a little bit. And then, for example, we need to have a good balance of the return profile and risk profile. So we are not saying that speculation is good, but we would like to have a very objective, recognition of the upper potentials and lower risk, lower potential risks. So this is something that I want to deliver.
Excellent. I think you have mentioned you have a presentation you may want to share with us.
Yes, thank you very much.
Please,
so yeah, I try to share my presentation. Oh, sorry. Oh, just a moment, please. Okay. Okay, can you see my slides?
Yes.
Okay, thank you very much. Very honored to have this opportunity to make the presentation on the disaster risk financing through insurance and private-public partnership. So I'm a general manager, international affairs, Nippon Life Insurance Company based in London. Also, I have been serving as a Sherpa for the APFF Insurance and Retirement Income Network in Asia Pacific region. Also, I'm a project director for Music for SDGs project. And recently, I serve also as a global ambassador for the World Hikari project, which is providing a technical assistance as well as the movie production. And so just like that would be explained at the end of my presentation. So talking about APEC, so I have been serving as a Sherpa for the Insurance and Retirement Income Network for 11 years. And then every year we submit the progress report to APEC finance ministers. And then the one of the big initiative was the Stable Action Plan, which had the 10-year round roadmap for the APEC finance ministers, and that is concluding this year. So because it started 10 years ago. So this means that we need to draft the next 10-year roadmap later this year. So, and then I'm already going to Washington, D.C. to discuss on this matter. So probably we will have more focus on the digital technology and innovation compared with the past 10 years. And APFF Insurance and Retirement Income Network have the mandate to promote insurers and pension funds' roles to support the sustainable, resilient, and inclusive growth and development of the Asia-Pacific region. Especially, we have been working on promoting regulatory and accounting regime that do not discourage insurers from making long-term investments. Three aspects in infrastructure, capital market, and funding innovation. With regards to the disaster risk financing from the investor side, this is also relevant. I will come back to this issues later. So this photo shows that I have been a regular speaker for the APEC Finance Ministers meeting in Santiago and Bangkok, and I have been promoting this high-level recommendation to them. So in terms of APFF disaster risk financing and insurance, the Sherpa was Mr. Masaaki Nakamura from Tokyo Marine, and we have been working on promoting the disaster risk financing and insurance. So you see the photo which says Basel, Switzerland. So in, exactly 14 years ago, today, there's a big earthquake occurred in Japan called the Great Tohoku earthquake. And at that time, just immediately after I joined the meeting at the BIS in Basel, discussing about systemic risks. Some of you might remember that we had a big debate of the SIFI and systemic risk. But isn't it amazing that even the earthquake could not stop Mako Kubo from flying around the world? But anyway, so this is our memory. So at that time, the APFF has identified the 5 different important points in terms of the disaster risk financing. First, developing sound financial and insurance market. Of course, the capped insurance is important. It's about the protection gap. So we are promoting to have a coverage by the catastrophic insurance, such as earthquake insurance. But not only that. So this group is very focusing on developing the cat bonds. So because in many cases, for example, those people who lost everything, like the money and house and work, but not everything disappeared. The one thing remain is the loans. So when they borrow money, the loans remain. The rest of the things disappear. So people say that it starts from zero, but it is not zero. It's from the minus. So in order to avoid that kind of situation, the cat bonds is somewhat promoted by the APFF and other international organizations and initiatives to make sure that the people can raise the funds to in a way that if they have a big earthquake, at least the principal and interest rate could not don't have to be returned. So in terms of the financial markets to address the catastrophic risk, so some decades ago there was a cat swap transaction. They just like having a swap transaction between the Tokyo earthquake and Florida hurricane. The idea is that the swapping, there is risk which are low correlated, so they are trying to minimize the largest exposures with the minimum costs. So this is a kind of idea. So it's called cat swap. And then the another one is like believe it or not, in Japan, we believe that the catfish is like a fish has a supernatural power to actually foresee the earthquake, for example. And then there's a group of the people who are observing the motion of the catfish who foresee the potential earthquake in the future. So please remember, as an alternative for cat insurance, cat bonds, cat swap, and catfish. Although the last one is not included in the APFF report. The second, enhancing disaster risk evaluation through use of data. Here, the digital technology is actually helping the address of the disaster risk. The one of the example is that the newest technology is actually identify the anticipated motion of the people. So this kind of technology would actually help to minimizing the potential risk about the disasters in a very innovative way. So we are trying to use the data wisely to address the disaster risk financing. This is the second component. The raising public awareness on disaster risk is education about the disaster risk. So it's typically the insurance industry is the provider for the education actually to survive and recover from the disaster. I will come back to this issue later, but this is also a very big initiative. And steering investments to upgrade disaster resilient infrastructure. The now life insurance company is also relevant. But we are trying to have our real estate investments, or for example, the life insurance company have a lot of buildings, but we want to make sure that those buildings are sustainable and also resilient at the same time. So it means that even if you have a big earthquake, it does not collapse. So maybe Japan is notorious for the big earthquake, but you're just hearing the news like we have the magnitude 7 earthquake, and so far no deaths reported. But if it happens elsewhere, can you imagine what would happen? So Japan is built very, very resilient because of so frequent earthquake. We are learning from the disaster, and we are making our infrastructure very resilient. You will see the picture of Urayasu here. So this is actually the apartment that I lived during the big earthquake. And this boy is my son at the age of 11. So because of the liquefaction, a very, very big damage on the road, and maybe the pole, the electric pole was just like fell down. But what happened is that we evacuated for about 1 month because of this issue. And I came back to my apartment to find that my glass of champagne, which were left one night before the earthquake, still remain in the glass on the table. Can you imagine that this, glass of champagne was resilient?
This is a resilient infrastructure.
Magnitude 7 earthquake. So this, I'm not talking about champagne, but I'm talking about the disaster resilient infrastructure. So knowledge sharing to prompt actions and public-private collaboration. So we cannot solve this problem simply by the private sector, because, for example, the Tokyo earthquake potential risk and loss was probably bigger than the maybe free capital for all the insurance companies in the world. So the insurance cannot be the sole solution for the biggest earthquake that may happen on this planet. So we need to have a public-private collaboration. I will come back to this issue later. So the APFF has the 11-year work, 10-year work, please. So this is a kind of the past, like actions made with this activities. So Mr. Masaki Nagamura provided this historical record, and now the APFF is working on the some other matters like risk mitigation, also insurability of the physical climate risk. These are the two topics that they are covering today. So I think the recruiting Mr. Nagamura from Tokyo Marine is probably the largest contribution of Mako Kubo on the disaster risk financing in Asia Pacific region. So, and then IAIS, I used to work for the secretary of the IAIS in Basel, Switzerland, representing the regulators from all over around the world. And then actually the organization has recently published a paper called A Call to Action, the Role of Insurance Supervisors in Addressing Natural Catastrophic Protection Gaps. So now the regulators are addressing how they just address the protection gaps. It's a very remarkable change, for example, from the time that I was working at the IAIS. So it was 2002 to 2006. The main objective of the regulators were the consumer protections, and also the financial stability. It was talking about the customers who have already signed a contract. We needed to protect those consumers under the contract. But nowadays, the regulators are looking at the issues like those people who are not covered by the insurance companies, the insurance contracts, they may have a huge damage by the disasters. So they are just talking about the affordability and availability and accessibility to the insurance products. This is a very new trend, but I think it is very important because if you just have a very perfect insurance market for 1% of the population, you're not making the solution. So we need to have a bigger solution. This is kind of listed here, so it's a good reading material. So this is earthquake insurance system and the private-public partnership. So Japan earthquake reinsurance system involves the 4 main players: insurance companies selling earthquake insurance, the government acting as a reinsurer and also supervisor, an administrator established in 1966, and they are just in insurance pool and manage investments and liability reserve, and also insurance rating is also helping. So this is kind of the 4 different major players that collaborating each other. So this is the PPP system under Japan. So this is the government support on earthquake insurance. In Japan, the government supports the very big earthquake because if you have a big earthquake, the private sector insurance company cannot afford. This, for example, there are several different contributions. For example, before going to the earthquake insurance reinsurance system, the Ministry of Finance also promotes earthquake preparedness, risk and insurance to consumers. So the mass, for example, like advertisement, and also that they are giving the tax incentives for the earthquake insurance premium, so that the people can easily purchase the earthquake insurance to prepare against the catastrophic. And then, so far, I think I must say that the private sector has covered all of the payouts without relying on the governments for the most of the earthquake, but only for the very large scale earthquake, some portion have been contributed by the governments. So these are the lists of the earthquake. The most recent earthquake, Noto earthquake, is not here because its statistics was before. January 1st of 2024, the big earthquake occurred in Noto. So we don't have a data here, but we are now working on the addressing and also recovery from the Noto earthquake. I come back to this issue later. So, but potentially the government can assume a big portion of the liabilities. So in case that potentially the very huge earthquake will go in the future, so the up to 99% the government can just support this system. So it's like a collaboration between the private sector and public sector, depending on the impact of the earthquake. This is a system in Japan. So some people are just arguing whether the government should be involved or not, but it's like a choice between the tax or the premium. So since the insurance have a very big penetration, anyway, it's a very similar effect between the taxation and also premium income. But the taxation have a wider reach. So for each individual may have a little burden compared with using entirely the private sector insurance. So this is kind of idea that exists in Japan. It's a public-private partnership is the core of the protection for the earthquake. But it's only for earthquake. It does not cover typhoon and other type of disasters. But those disasters, private sector insurance company should just assume those risks. So there are some exposures that.
Mark, can you come back to yes here? Do you think that there is because we have almost the same approach in France with the Caisse Centrale de Réassurance that
Yes.
takes care, you know very well how it works, and you know that in the world there are several kind of schemes and pools that are all gathered under the World Forum of Catastrophe program. We have the one in Romania, in Spain, and even in California with the California Earthquake Authority. Do you have the feeling that in this picture here that shows the capacity that the private sector put on the table, as well as with the government, who's the ranger of last resort, but seeing the capacity here, I really do believe that there is room for the financial sector, for finance, for cat bonds. Do you think any possibility for a layer that includes something in the financial sector?
Okay, so it's a very good question, and actually, this is a mechanism to support the financing of the cat insurance. So it's like the consumers are buying the earthquake insurance. So when the earthquake occurs, you have to pay the massive claims for this earthquake insurance. So in case it is not, it will be a very huge, payouts. So the government have a capacity to support those payments, but it's about the cat insurance. But cat bonds is addressing something more, because cat insurance is only for the assets, and then maybe like the house, but the certain limitation. But the cat bonds is actually about the financing of the household. The cat bond is normally for the companies or also governments. So it's beyond this scheme. So because you borrow money, you raise money for your business, and then if your business is destroyed by the earthquake, and then you have to deal with this remaining loans. So that would not be addressed by this scheme because it's not insurance. So the cat bonds and or the securitization of the insurance risk would cover those aspects. So it's a like a target will be different.
Yeah.
And I think the another potential areas for the financial market is the probably somewhat like the climate credits, carbon credits. So nowadays we hear a lot about carbon credits. For example, if you have a good sustainable business, and then you can have some benefits of getting the carbon credits. But maybe if you look at the, for example, California earthquake, and then you a lot of houses, but those houses were not built in a way that they avoid a massive damage from the wildfire. So if you just plan wisely, so maybe we can already prepare for that kind of disasters. So the resiliency credit can be used for that purpose. So maybe we can make the world more resilient. We can compensate by the credit for various projects which are good, very good in terms of resiliency. So that will probably have another way of giving the financing for the disaster resilient infrastructure and other business or something like that. So there are a lot of potential for the future that we can use the financial mechanism and financial market, capital market, innovations to help that. So this is why I just share some of our activities from the APFF project, talking about the capital market infrastructure and funding innovation. So usually this is in the context of the life insurance companies and pension funds normally, but it is also relevant to the preparation against the disasters.
Fantastic. Thank you very much. I'm sure that if we have an opportunity on credit carbon, I'm going to invite you both and have another side event just on this one. Please go ahead, Mac, with your presentation. Thank Thank you.
So far I have been talking about the general insurance aspects, but the life insurance companies are also very relevant to this. So during the big great Tohoku earthquake, the life insurance company have making the best effort to support the community and society and the people. So, for example, we have the 4 different measures listed here. The special measures on the insurance contracts and claims procedures. So, because everything is destroyed. So, for example, like the insurance contract terms and claims procedures. So, if you have follow the traditional way of the claims handling, so the customers cannot get the money in time. So we have the special measures actually to pay to help the people in urgence. Also, safety confirmation of customers. So in Japan, usually the claim handling should have a proactive approach. So Japanese insurance company are not waiting for the claims reporting from the customers. We approach the customers for all the claim handling. So if we know that there's for example, hospitalization somewhat, so we need to approach to the customers before they file claims. So this is the Japanese custom to do business. So what happened during the earthquake is that we have a lot of affected sales agents with the tied agents as employees of our company, and they have maybe different customers or prospect customers that they are dealing with as the agents. So they just make sure they just trying to find their customers are alive or not. So actually, safety confirmation was done even quicker than the government by the insurance industry. So we got the award from the Prime Minister for this kind of activities, and definitely the reputation of the life insurance industry has been enhanced by those kind of those kind of activities, and also ensuring insurance payments and treatment of missing people. Usually, you need to determine whether the person is dead or not when we pay life insurance. But now with the tsunami, so nothing is left. So we are not sure who are dead definitely. So but we are decided to pay the claims for the missing people, assuming that they are dead, because those families who are left need money immediately after the earthquake. And responses to disaster orphans, I think this is very unique to Japan. So I have never heard of similar, services rest of the world. So let me share what we have done during the Great Tohoku earthquake. So there were so many disaster orphans. This means that only child was left and the parents are all dead. So those children, so many disaster orphans just brought because of this big earthquake. So then those children lost the parents, lost the house, lost the money, lost everything. The school is destroyed, everything, except for the hope for the future. The hope for the future was provided by the life insurance contract that the parents left for these children. So I have a question here. If we pay the death benefit of maybe like 30 million yen to the 8-year-old boy, is our mission completed? So we did not think so. So Nippon Life took initiative and just working together with the Life Insurance Association Japan to have a collaboration between the legal profession and the insurance industry, and to make sure that the money that life insurance company paid to those disaster orphans would be used exclusively for that child, not just pay for the trouble of the cousins. Because the life insurance policy is actually the promise with the company to deliver love from one generation to another. So our responsibility is actually to keep the promise to make these children happy. So this is also very interesting, the experience. And this is also only done because of the fact that disaster offers a very big number during this earthquake, but potentially any orphans may have a similar situation. So in the future, I think the use of AI and technologies, we can probably help this kind of situation when the little children are the recipients of the life insurance money. This is something that I want to do in the future. So this is a kind of our experience from the disasters 14 years ago today. Lastly, so
Thank
it's
you.
about the music for SDGs. So also I have been working as the executive director for the Music for SDGs project, the project to promote the United Nations Sustainable Development Goals through music, fashion, art, and movies, integrated entertainment and education. It's called edutainment, and the slogan of "No one will be left behind." I started this project in 2018 in New York. At that time, our activity was a very small scale, but actually, somewhat because of the pandemic, so we started expanded our music activities through online. So now I got more presence in the global, community. So these are the list of our activities that so far. So we just participated in MENA Climate Week. We delivered the reception at OECD and also UNEP 50th anniversary. We go to Cannes Film Festival, Venice Film Festival. From that, we are creating the United Nations Kids Summit, inviting the children actually to educate them to make sure that they have ability to make their own decision in the future, which is good for sustainability and resilience and inclusion. And also the PRI in person had an annual meeting in Tokyo, and Music for SDGs hosted a reception at Tokyo Tower. Also the APAC 3 Gala Dinner, I talked about APAC. So the Gala Dinner entertainment was produced by Music for SDGs. So I was a producer. Also the Fashion Week, the Paris Fashion Week, New York Fashion Week, London Fashion Week, and Milan Fashion Week. I got on stage as a speaker to talk about sustainable fashion and combining the promotion. Also, Kyoritsu Women Universities, and I'm doing the education about life insurance company contribution on sustainability in the musical form. So, for example, live music BGM. So each PowerPoint is followed by the singer. So this is the kind of the things that I do. So recently I joined the pre-Grammys World Entertainment Award. There I got on stage and talking about the power of music to connect the people and encourage the people from disasters. This year's Grammy Award ceremony has the disaster resilience as a topic. That's why I was invited to talk about that matter. So these are the example of our activities, but it's a good thing is that we got the very big, the people, the populations who are interested in our projects. So we are trying to get hundreds of millions of people just educated through our entertainment, and also role of insurance can be a part of this. So now I'm producing also the music performance to promote cat bonds, for example. So I have been talking with the Bermuda business community that if they're interested in inviting us a musical show in Bermuda to talk about that. So there are a lot of different potential.
Excellent.
So then now finally, and so I want to share the collaboration with the World Hikari Project. The World Hikari Project is actually the very wide range of the contribution on the sustainability, which have the medical and pharmaceutical, digital, and the transition energy. So usually they provide technical assistance for the governments and also the companies, but they are also working through the entertainment. That's why the Music for SDGs and also the World Hikari Project have been collaborating each other. So there is the video created by World Hikari Project. So please enjoy this video.
Thank you.
This reaction is actually this is how it was very famous cultural activity. This is the video from the Noto Art in January 1st. And then we are trying to produce the movie based on the earthquake. Very area. So you know the wildfire California. So we just have the demonstration of this in California. Also the having some collaboration. So we are working on Sri Lanka and other countries to have a system. This movie is actually connected with the cultural context. So this movie is actually a combination of animation and Japanese art. So it's a very traditional Japanese art actually connected with animation with the real movie. Latest movie production like a the concept is not to recover from the disaster, but we are trying to recover from the disaster more, better, and sustainable. The traveler is actually representing a popular future. So this is the we are producing the movie in the future. So this is kind of image for our direction. But this is kind of there are several different movies that we are working on, and the One Hikari project is actually revolutionizing the movie industry. So this is also Sri Lanka, which is working on, and also France, UAE, movie production. So and then this is the United Nations. We are working to invite the children to the United Nations and the UN September. Actually, we are now having some workshops in Rome and Italy this month. Then we can be ready to join. So Reakun is a kind of very renowned social activist. He's at the age of 10. He just collected the 5 million euros through art and donated to Ukraine, which are victim of and then this kind of activity. So children can make the world better. So this is kind of the collaboration. So this comes to the final slide. So music for SDGs. I was at the COP28. This drawing is a digital art on biodiversity. This is a drawing of me at the age of 6, and it was just made into a digital art. And I just this is the theme is about biodiversity. So it's like it's a sustainability topic painting that I did at the age of 6. So and then also we are preparing for the Earth Day Music Festival. So just maybe either about the insurance, innovation, investment, entertainment, whatever the subject, please contact with me if you're interested in working with us. Thank you very much for your attention, and merci beaucoup. Muchas gracias. Dankeschön. ありがとうございました。
Thank you very much. Merci, Mac. Thank you very much. We appreciate. I have a very quick question to you.
Yes.
This movie, you were in Cannes last year. Are you going to attend again this year?
Yes, I'm thinking of going to Cannes Film Festival together with the World Hikari Project and
Excellent.
also some of the side events. So we are interested, and also we are interested in the Ocean Summit later in the Côte d'Azur. So we cover for example, like the ocean issues and also forests and nature. This is something that we are working on. Not only we don't think that the reduction of emission of CO2 would save the planet or the humans. We need to deal with the nature. So we need to absorb the CO2 by getting the nature back to this planet. So this is something that we are working on, both as investors and insurers, and also as the music producer.
Thank you very much, Mac. Laurent, would there be a chance to have you also in Cannes for the festival, or the UN Ocean Conference that we'll have here in June?
I would love to, but I'm not sure at all to come. And unfortunately, I have not been selected as producer or director or even actor for the Cannes Festival. And for the Ocean Festival, I'm still looking at it. I cannot assure you, but I will try my best.
Fantastic. For Cannes, I'm sure that we can do something with Mac. We can work together on that. Gentlemen, I really appreciate your involvement. I would not want to leave the scene. Just I would like you to ask each other one quick question on this perspective. You were very kind, both of you, to share. Mac, I will start with you. Can you ask a question to Laurent on whatever you have the feeling that you have exchanged today and mutually presented?
Okay, so I explained about the Asia Pacific situation and just some of the points that we are working on. And I'd like to hear from Europe, for example. Like in Europe, we have a similar initiative. And is there any possibility of collaborating between Asia Pacific and Europe on this matter?
Yes, Mike, I'm sure that there are many possibilities to work and to develop collaboration. As you know, and it was referenced by Bogdan, we in Europe, we don't have a unified system for insurance and reassurance, and we have in France what Bogdan was referring is central system of reinsurance, which is a public system. I would be very happy to put you in contact with them. Of course, there is at the moment a big discussion is about who is responsible for the disaster. We know that for the earthquake, nobody is responsible of the earthquake, but the constructors, the builders, are responsible for having resistant buildings. And this is when we look at what is happening each time, not necessarily in Japan, but in Morocco, in Turkey, in low income countries or middle income countries or developing countries, and even in Italy, we saw that we pay, and when I say we, it is mostly the people who live there who pay a high price for not having prevented not the earthquake, but the effect of the earthquake. And I think that all of us have a very high responsibility to avoid that in 20 years, 30 years from now, our children, grandchildren, or whoever will say, well, you did not do the right things to do to prevent disaster. And this is what you are contributing to develop. And I'm very grateful to you, Mark, and also to you, Bogdan, because I think that those issues are the key elements for ensuring sustainable future for all of us.
Great, thank you.
Thank you.
I think we cannot probably avoid the earthquake because nature is stronger than us, but we can create this infrastructure which can resist against the earthquake that occur. So we try to. Unfortunately, Japan has a lot of the disasters, but we use maybe we have a destiny actually to learn from our experience and share that with the rest of the world, so that we can help the other people to learn from our experience and prepare for the future disasters. Because of the climate change and other different reasons, now the frequency of the disaster is actually 5 times as much as before. So and then we need to prepare. So now I'm very happy with the technical assistance for the like emerging market economies like Sri Lanka that I was explaining during the video. So we want to make sure that those people can survive and recover if something happens.
Thank you, Mark. Thank you, Laurent. Laurent, you just mentioned that in Europe we don't have a unified system. So I just want to raise your attention to both of you that in December, EIOPA launched this report inviting to have a look on the possibility to have on one side a scheme for all the member states where on a mandatory way they contribute, and on the other one a reinsurance scheme where the private sector would be involved. So now it's in the process. We are, I guess, we are going to think about and to analyze what we can done to cover all ground. Should it be on the public risk on one side and private sector on the other one? Gentlemen, thank you very much. We highly appreciate all of us your comments, your presentation. Should you have anything more to add, please feel free now. So thank you, Laurent. Thank you, Mark. I will leave it here for now. I'm sure that we'll have many more opportunities to share our thoughts from the financial market insurance sector in the very future. And I wish everyone a fantastic development cooperation forum tomorrow and after tomorrow in New York or online. Thank you very much. Thank you all. Thank you. Bye-bye.
Thank you very much.
Thank you. Merci Laurent. Merci Mac.
Thank you beaucoup. Thank you.
Merci.
Merci beaucoup.
À bientôt, Mac. Bon retour.
À bientôt.
Bon retour.
Oui. Merci beaucoup.
Thank you.
Oui. Au revoir.
Au revoir.